You are live. Good morning. Today is Sunday, August the 7th, 2022. And it is, I hope you can see me. My screen is very, no, you should see me fine. Screen's very reflective, so I don't know why that is. I guess I have a glass computer screen. Anyways, good morning. Like I said, it is Sunday, August the 7th, 2022. For those of you watching this in the future, it's a weird thought, but I guess I was just watching that movie Tenet the other day. He was saying anything that gets recorded is like communicating with the future, so weird. But if anybody's watching this in the future, welcome. It's been a few weeks since I've done one of these. Just been enjoying the summer, and it's one of those times where people are taking vacations and trying to live life and have fun rather than listen to a stuffy conversation about trying to make money or what the economy is doing or things of that nature. So hopefully you've been enjoying the summer as well. I can't promise that I won't go missing for one more week, possibly before the summer ends, before we get back into a regular weekly routine going into the fall. But it's been such a lovely summer so far, at least here in the Greater Toronto area, that I had to take advantage. In the time I've been gone, the economy has been doing some crazy, interesting things, or maybe not the economy, but the world around it, the people in control of it, et cetera, et cetera. So I'm excited to talk a little bit about that and what it means for me as an investor and for you as an investor, and what it means for individuals in the economy in general. I guess I'll start with the 100-pound gorilla in the room. This announcement was made 2 weeks ago. I guess maybe almost 3 weeks ago now. The 100 basis point hike that was prescribed by the BOC and later followed by the Federal Reserve. That is a massive hike. Much larger hike than we have seen in recent years, in modern years. And if you listen to the news or the television, or if you just talk to people on the streets or at work, you'll find that those people will talk about this 100 basis rate hike as if it is cataclysmic, as if it is going to be massively impactful, and as if it is completely unprecedented. And they are correct on all three accounts. But also, as people tend to be, they might be being a little dramatic, right? One of the important things, I think, for everybody to do in life, but certainly if you're trying to be a successful investor, is to understand things in context, right? Whether or not a home is a good investment it's not an absolute thing, as hopefully we've all come to understand doing a bunch of analyses here. It's a relative thing. It depends on the context. A house that is making $60,000 a year might be cash flow positive in Sudbury and cash flow negative in Toronto. It is relative to its context, right? As are all things, right? And so when we see this 100 basis point hike, we have to also contextualize it and make sure that we're understanding it, not just as a one-off event or incident, which makes it rather unprecedented, but in the scope of kind of the history of these things and the effects that these types of movements have made on markets in the past. A 100 basis rate hike. Well, okay, so hold on. So if we're going to talk about the past and the precedent with regards to interest rates and rate hikes, there are a few things that are important to understand. One is that, generally speaking, this technocratic management of interest rates, that is a central bank controlling the prevailing interest rate of a market economy, is a relatively novel idea, right? This is something that we've been doing for just under a century. Okay, it's not something that has thousands of years of history or even hundreds of years of history like our country's religions, traditions do. This is a 100-year-old idea. And technically speaking, there have been attempts to do this in the past that go back more than 100 years. But in terms of the institutions that are doing this in our society today, those institutions only have a 100-year history. And so for them, there is an element of this which probably is unprecedented. And there are a lot of philosophical and political reasons one might say that this is a unique circumstance or situation. And I'd be inclined to agree with those arguments if we're talking politics. But if we're talking the economy, then this is not so unprecedented, because the interest rates were not always governed by these central authorities. They used to be governed by market forces, or at times they have been, and at other times they have not been. And so we have seen rates move, probably not quite this aggressively in the past, but pretty aggressively. And we know what those types of investing environments look like. We have statistical data on them. If you want to compare the period that we're in to another period in economic history, one of the places where you would start your search would be the 1970s, right? Tail end of the 1970s into the 1980s, they experienced massive inflation and interest rates spiked. At one point, you were paying 18% to take out a mortgage, right? And people did. People took out mortgages and they bought homes. Not all people, of course, the people who could afford it, but people did, right? So it's important that we understand in context that where we're at now with our approximately 3% interest rate is still a very, very low interest rate. In fact, it's probably well below what the prevailing market interest rate would be. And so this is why you may hear sometimes, if you're listening to the pundits or the economic commentators, they may talk in terms of negative interest rates, and this is what they're referring to, right? Is that the interest rate is actually below where it would be if the market set it, so it's theoretically negative, right? It's not neutral. You've subtracted off of the rate that there should be, and so the person paying the prevailing rate is actually paying less than they should. This is a negative interest rate. We've had negative interest rates for over a decade now, and we still have them even with the hikes that we've seen. We will probably continue to have them until we get to about 5.5%, somewhere around there. And that is normal. Lots of economies have survived with that percent interest rate. It's not necessarily a problem. It is a problem for the undisciplined, people who just are getting themselves into trouble with debt instruments, and B, for I guess, what do you want to call it? The sort of unsophisticated investor, right? If you're going out there and you're buying a property kind of on a gut feeling, or because it went up last year, or you're buying a condo in Toronto because that's like the thing to do, you may get burned by these interest rates because you're not prepared. You're not understanding your deal in the context of the market, and the market is quickly changing around us. And so it's very difficult to make that simple extrapolation into the future of what we've just recently seen to make an investment, right? And so that simplistic approach may end up hurting investors who attempt to take it. We obviously know there are a lot of people who have already. This is what most speculators were doing. They're looking at the last 12, 24, 36 months of performance and saying, hey, this property has gone up $200,000, $300,000, $400,000 in the last 3 years. I should get in on this. I would make a cool $100,000. Depending on the properties that they've bought, as those interest rates are climbing, those people are going to get hurt. And I don't know that we're starting to see that yet. Certainly there's pressure being put on the market, and we're seeing that manifest itself really, really easily. Okay, actually, before I say that, so one last thing about the interest rates. I think I've gone over this before, but I just want to quickly touch on the purpose really of interest rates, what they do, how they function, why we need them in our economy, and what's happening right now as a result of them having been manipulated for so long. An interest rate is a price. That's all that it is. An interest rate is a price. It is the exact same thing as when you go into the dollar store and you see a chocolate bar for $1. An interest rate is a price. It's, can I buy something? How much does it cost? In the case of the dollar for the chocolate bar, $1 buys you a Snickers or Twix or whatever, right? In the case of the interest rate, The interest rate is telling you how many dollars you need to pay on top of the dollars you borrow in a given period of time. So in 1 year, typically it's an annual prevailing interest rate, right? So if I have a 10% interest rate, then for every $100 that I get from you today, I must give you back $110 in a year's time or in 6 months' time, or however the loan agreement is structured, right? Very simple, very straightforward. Everybody has a good understanding of it here because we all pay interest rates on our investments at this point. But still, it's important to review and remind ourselves of what this thing is, right? It's just the price. That's all that it is. And the price is telling us how much present money costs in future dollars. That's really what it is. And this is a very important price, right? Because the economy in general and our investments specifically, right, are allocations of resources. We're taking money that we have a limited supply of, right? That is, you don't have unlimited funds. It's a scarce resource to us. We're taking that money and we're looking at the market and we're saying, what is a good price for something today that will have potentially a better price tomorrow and or can produce cash flow today, right? So this is the question, right? And another question is, how much can I pay for money today to get cash flow tomorrow, right? Very important question, right? Because this is the question of how big of a mortgage can I pay for and how much cash flow can that afford, right? So this is a very simple question. This question is the fundamental economic and investment question, right? If I sit down with you and I say, hey, I've got a property that makes $100,000 a year, right? Your first question needs to be, well, how much does pity cost me? More principal, interest, taxes, and insurance. How much am I going to pay for that on this property that earns $100,000? Because if I pay $25,000 in pity, I know I'm going to make money on that $75,000 that's left over, right? And conversely, if I pay $125,000 in pity, then I know, and no matter what I do, I'm going to lose money. I'm not going to have cash flow, right? So the interest rate is a very important price because it's allowing us to determine, right, what is and is not a good price to pay for an asset in the present, right? And what is and is not a good financing arrangement to continue paying for that asset into the future, right? And so when this signal becomes confused, distorted, manipulated, okay, then that means that the individuals in the marketplace are going to make less accurate decisions on how to allocate their resources. Because, for example, an artificially low interest rate is going to make deals that are not good deals look like good deals. Right? If you need to, just to keep the math simple, we're going to buy a $100,000 house. And this $100,000 house is going to make $25,000 a year, right? And you're going to pay on that house a 5% interest rate. So every year you got to pay $5,000 to own that house, which is totally cool because it's going to make $25,000 a year. So after your other expenses and whatever, you're left with $12,000 of cash flow. You're making a cool $1,000 a month on this property. You're happy, good deal. Really, really, really sweet, right? But if 5% is an artificially low interest rate, and I'm just using these numbers for illustrative purposes, but 5% is an artificially low interest rate, right? And the real rate is actually 15%, right? And then if you buy that house thinking, oh, I'm going to make $12,000 a year, right? Well, that's not really correct, is it? Because you're not supposed to pay $5,000 for that house. You're supposed to pay $15,000. And if you pay $15,000, then actually you only make $2,000 a year in cash flow, approximately, right? And if you only make the $2,000 a year in cash flow, well, maybe that's not worth your while, because $2,000 on $100,000 investment is a 2% return. And as it turns out, you probably find a 2% return anywhere. In fact, why take the risk on a property at all? You could probably get a GIC at your bank that'll pay you 2%, right? And so this is the fundamental issue with manipulating these rates and with playing around with them, is they cause people to make, even rational people, right? People who are trying to do the right thing with the right education, et cetera, et cetera, et cetera, causes these people to make the wrong decisions because they are allocating their resources based on a signal, in this case, the price of future money, right? Interest rates, a signal that is incorrect, that is actually inaccurate, right? And you see this with all sorts of things. This is the reason why there was the housing, I'm going to call it bubble, but whatever you want to call it, the run up to this latest round of interest rate hikes, the last 2-3 years, right? Interest rates were very low. Those very low interest rates were saying to buyers, hey, borrow money today because almost whatever you spend it on, because the interest rates were so low, will go up in value, will improve in value. And so people did. And what that meant is that you got more and more dollars entering the economy, right? Because when banks loan money, they print it ostensibly. You got more and more dollars entering the economy, chasing after the same number of goods, right? And what we know about supply and demand is that if the supply of something increases, then the price of it falls, right? If the demand for something increases, then the price of it rises, right? So we know that the supply of money is increasing because people are borrowing money and then they're using it to demand properties, right? And so the supply is increasing, so the value of that money is falling. And at the same time, they're demanding more property, so the price of those properties is rising. And so this is why we see the runaway valuations that we've seen in the marketplace for the last couple of years, is all of that money chasing investments that are not good investments, right? What do I say all the time, right? Oh yeah, you can invest in Toronto. Are you investing or are you speculating? You're probably speculating, and these speculators are going to get burned and blah 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 blah. Right? I've talked about it all the time. It's that there's a huge difference between investing and speculating. A lot of people are speculating and they are opening themselves up to get burned. This is exactly how it happens, right? Now you've got interest rates increasing. Right. And there's one of two scenarios. Maybe you are a speculator, but you're smart. You've got a fixed rate mortgage. And so you're insulated for the next 4, 3, 2, maybe 1 years, right? Depending how much time's left on your term. Or you're one of the even riskier and you didn't get a fixed rate mortgage. And so you're on a variable. And right now you're really feeling the pain because that mortgage payment that you thought was going to be, $2,400 a month has just shot up. It's just cracked $3,000. And you don't have that extra $600 a month allocated in your budget, right? So what happens to these people? Well, they get squeezed, right? Obviously, that guy who is now putting $600 a month in to keep his property afloat, right? He can probably afford to do that, depending on what his job is and what his financial situation is. $600 is not that significant, right? $7,200 for the year, there's a good chance he maybe has $10,000 squirreled away somewhere and he can afford to carry that property, right? Now, obviously, if interest rates climb any higher and that 600 goes to 1,000 a month or higher, right, there is going to come a breaking point, if you will, where he just can't keep up anymore. And at that point, he's going to be forced to sell. Right? Now, he's going to be selling into a market full of people just like him who are all selling more or less against their will, right? And so now he's going to have to take a lower price than he'd like to take, right? And this is when we get a sell-off and it becomes a buyer's market. Now, to some extent, we're already seeing the beginnings of this because home sales are down 50% in some markets. I think Toronto's down 47% year on year. So if you're a realtor, you're hurting for sure. The income of every real estate agent, pretty much, maybe not the Sam McDaddies of the world, but pretty much all of the real estate agents, it's probably way down, right? Almost 50%, almost cut in half, right? And really the way sales are allocated in the real estate industry, there's a few guys at the top who really aren't probably not hurting that bad. And then most of the rest of the realtors are hurting quite badly. So there's that, right? So if you know a realtor, it's a good time to call them and just, see how they're doing, make sure they're not on the ledge or anything. And hey, if you can buy stuff from them, even better, because you'll probably get great service from them right now because they don't have a lot of people to distract them from delivering the best service they can to you, right? And they'll appreciate the sale. So that's something. But yes, we need to be aware that with the impending market correction, it doesn't just happen instantaneously, right? You get these rate hike bumps and then there's a lag while the market reacts to what's happened, right? And so people start getting their higher bills. They start realizing they can't make ends meet. They start doing the math and figuring, okay, I've got 6 months before this is going to bury me. And then they put their house up for sale, right? And eventually you get enough people doing this. It's kind of a stampede for the exits, right? And the houses are going for substantially cheaper than what they were going for before. And we're already seeing that. I mean, maybe not year over year. No, we're getting close to year over year. Certainly 6 to 9 months ago, you could buy some of these houses for 25% more than what they're selling for today, right? And we're seeing a lot of houses. I know I am seeing a lot of listings price reduced, right? Repriced, relisted, things of that nature, right? Where obviously they didn't get the price or the sale that they were looking for, so they're trying again because they have to sell in this case, right? So there's a fantastic opportunity while the market corrects itself for you, the investor, who's either saved up funds or developed debt instruments, either or, to be ready to move in and purchase assets that have been discounted by people who misallocated resources to those assets by not factoring in realistic interest rates or by not factoring in realistic cost basis for their investment. Right. And you can, of course, avoid that problem if you're doing accurate analyses, accurate cost basis, and you're thinking rationally about the performance of your money. Then you can be buying up assets in any economy, right? Even though right now the economy is maybe not the best, you can still buy assets. And because you were doing a proper analysis and you're understanding what you're buying, you'll still buy winners, right? The people who are losing right now, and this is true of all recessions, are not the people who are doing good fundamental analysis. It is everybody else, right? Warren Buffett, his net worth might go down, right? Elon Musk's net worth might go down during this recession, right? Jeff Bezos's net worth might go down during this recession. None of those men at the end of the day are going to be hurt. The value of their assets may fluctuate in the short term, but if you think Geico insurance is going to be less worth and is going to be worth less, in 5 years than it is today, you're probably, I mean, unless you know something about the future, I don't know, you're probably off basis, right? So that's something that we need to understand, right? Is there is going to be now, to talk about mindset and the psychology of investing, there's going to be now in the media, in the zeitgeist, in the world, a lot of negativity, a lot of pessimism, a lot of people saying, oh, you know what, the world's broken, this is broken, blah, 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 blame these people, that people, etc. I'm a victim. And they're going to be basically telling you that it's not possible to succeed right now, as if, you know, the universe or your divine being of choice or whatever, you know, chooses times when you can and cannot thrive, right? The reality is that if anything, possibly more people will get ahead now than we're getting ahead before, because, you know, there's a great anecdote Robert Kiyosaki tells in one of his books. He talks about being an investor, meeting some investors, like some really, really like top of their game, like Ray Dalio level investors, right? And talking to them, and you know, he was explaining to them how he was such a good investor. He was smart. He was this, he was that, and how much money he'd made and all this. And he said, you know, none of these big investors were impressed that he'd made money, you know, on the stock market or however he'd done it. They all basically looked at him and said, yeah, any idiot can make money, right? That's the easy part, right? Why don't you tell us a story of how you did something that stopped you from losing money? Because that's what separates the really good investors from everybody else, right? Most people can see that there's an uptrend in Toronto. They can buy a house and sell it a year later, and they can make $100,000. That's cool. Now, when that uptrend ends, where have they put that $100,000? Do they give back the gains that they made by putting it somewhere, squandering it, misallocating it, or do they see that downtrend coming and position themselves accordingly, right? And so, what's much more impressive is doing those technical or just portfolio management things that allow you to avoid exposure to the downturn events. That's what's really setting the good investors apart, right? Hopefully, one of the things that's kind of shined through from all of these seminars is when you look at the properties, they all start to look the same after a while. And the reason for that is that a cash flowing asset is going to cash flow. You know, if you're still at the stage in your investing journey where you are worried about whether or not you should buy, right, then you haven't done enough work on your mindset. The answer is, of course, you should buy. These things go up. That's what they do. Not in every market, not all the time, but if you've done your fundamental analysis, then a property is a valuable thing. I mean, it's you're buying cash flow at the end of the day. It's what you're doing, and there's work involved in that. I'm not trying to sell this as if like, you have passive income tomorrow and you just sleep all day and get paid. You can sleep most of the day, most days, but you got to do some work still. You've got to call people and you've got to organize things depending on how hands-on you want to be. But you can allocate your resources to good assets and they will improve in value. And if you do that enough over a long enough period of time, you'll make plenty of money. And if you want, you can do it in the short term and you make a ton of money, but usually that is going to require you to build your own asset, right, from the ground up. If you're buying the asset from someone else, a lot of the value is captured by those people selling the asset. And so it's hard to make the extra money. This is the principle behind building a business. For me, is you start with basically zero value in the asset, and through your hard work, you grow the value of that asset, then you can sell it. That's one way to get very wealthy very quickly, is by building a business, because it's such hard work and people are willing to pay for a stable asset. So if you have learned how to create an asset, you're set for life. And this is one of the important skills that you need to learn, right? If you can recognize an asset, right? If you can do all of the analysis, all of the understanding from top to bottom and say, this is an asset. Not only is it an asset, but this is how much it yields. That is saleable. That's a valuable thing. You can sell that. It's called wholesaling. It's called wholetailing. Sometimes it's just called flipping, right? Depending on how you're doing it and what your strategy and your structure is. But that is a 100% valuable skill set. And just to illustrate how valuable that skill set is, I want you to follow me on a thought experiment for a second, okay? So you go to the grocery store, right? And you're shopping. You want a can of food. Maybe you're getting some Chef Boyardee, right? So you're going to go in there and get some Chef Boyardee, some ravioli, right? You're hungry. You go into the grocery store and they got all the cans. They got like all the cans in an aisle, right? So you're going looking for your Chef Boyardee. Now, what if you went to this grocery store and there were no labels on any of the cans? They were all just silver cans. How much would you be willing to pay for the can you eventually pick up and you think is Chef Boyardee? Let's just say a can of Chef Boyardee is $1. You willing to pay $1 for an unlabeled can in the grocery store? That may be Chef Boyardee or it may be mushy peas. The answer is, of course, no, you're not. You might pay 20 cents for it, 10 cents. I don't know. There's a price for sure at which you'll buy that can, but it's not the full $1 that Chef Boyardee with a label on it to be worth. And this highlights a very important principle. In the economy, information is valuable. In fact, it may be the most valuable aspect of the economy. If we have a $1 can of Chef Boyardee without a label, I doubt you're willing to pay 50 cents for that can without the label. So half of the value is the fact that somebody has organized it and sorted it out and made it something where upfront what you're buying. That's organization, that's labeling. And you see there's labeling everywhere, right? There's labels on all sorts of things. So obviously there's a tremendous amount of value there. That is actually incredibly economically valuable. Right? If you went into a grocery store with nothing but unlabeled cans, they're all worth basically nothing to you because you have no idea what you're getting. And knowing what you're getting is a big part of buying something. In the same way, when I go out into the real estate market and I'm looking at houses, 1638 Venture Avenue, 2323 Johnson Street, 1363 Financial Drive, etc., etc., etc. When I'm looking at properties like that, right? It all just blurs together. It's like looking at cans. Right? At the end of the day, I don't know if Johnson Street or Venture Drive or Financial Drive. I don't know. I don't know what's valuable and what's not. I don't know what's a good place to invest my money. You know what? I'm just a lowly insurance broker. I help people to insure their cars and their homes and their boats and their cottages. And then, I spend 42 hours a week doing this. And then I come home to my screaming kids and I'm tired. I don't know. I don't know where I should put my money. If you could come along and say, well, here's a label, this is a certified investment, it does this, it costs this much, performs this well, will make you this much money, etc., etc. Well, now you've put a label on the can, right? And so now you see just from the can example, maybe that can goes from being worth 10 cents to being worth $1, and you get to capture that value. Right? So in the exact same way as an investor, if you're identifying opportunities in the marketplace and slapping a label on them, you need people to sell them to, so your work's not done, right? So there's still more work to do. But if you can just get that far, that is valuable because most people don't understand the marketplace to put the label on the can. Right. And so there's no shortage of people you can sell those investments to. Right. If you can find, for example, property that yields 10%, there are so many people right now who are getting 2 and 3% from their bank, whether they realize it or not. And all it takes is asking a few of the right questions to really put it to those people and say, hey, wait a second, you're being ripped off right now. Let's restructure this so that you can benefit, right? And you can be advantaged. So there's a lot of value to be created and introduced by the investor. There's a lot of active things that we can do, not just limited to looking for those good assets, but also what we can do once we found them, right? And so I want to just highlight that because I know right now the mentality and the energy in the world is going to be very negative. Oh, you can't get ahead. You can't. That's a load of crap, right? And that's always a load of crap because it's always the same people who say that stuff. It's the people who aren't doing anything, it's the people who had an excuse when the market was hot not to do anything, and now they've got an excuse now that the market's cooling off not to do anything. And back then they'd have told you not to do it, and you would point out to them, oh, I made a ton of money, and now they're still going to tell you not to do it, and you're going to make a ton of money. And these people, I'm not just talking about people in your life, there's obviously them, but I'm talking about the people on the screens too, right? You got the media, the news, the investment talking heads, the this and the that, I'm going to pivot a little bit. I'm going to talk about the government of the United States. Pardon me. The government of the United States. Speaking of people, on your screens, they've decided to redefine words. I went to school for business and economics. I studied economics, and even when I was in high school, I took the voluntary economics courses in high school. And, the definition of a recession has been, at least for the last 15 or so years, 2 quarters of negative economic growth, negative GDP growth, usually. 2 quarters. That is 6 months. Last month, we crossed the 2-quarter threshold, and the government of the United States went out and said, no, that's not the definition of a recession. The economy is doing very, very well. I don't like to get political in the sense that I don't really like the left or the right. I mean, I have my preference at this point in time, and that preference has changed throughout my life. At this point in time, I know which side I like better, I guess you could say. But it doesn't really matter. They're all liars. They're all cheats. They're all people who want to get involved in your life and meddle when you would be better off controlling your own destiny, right? But I just want to point out the just pure dishonesty of these people. To take a word that is very well understood by everybody, more or less, right? Even if you're not an economist, you have a pretty good idea of what a recession is. And to just blatantly lie and say, oh, no, it's like literally you're standing out in a rainstorm and they're telling you, oh, yeah, it's not raining. Don't worry about that water on your face. It's not raining at all. And so, anyways, I just thought it was callous and brazen the way that they would, literally redefine words. It's disorienting. And it throws people off. And you see that there's kind of an overarching philosophy with this stuff, right? I like to call it disempowerment through misinformation. The media and the government are in cahoots. Together, they kind of form the ruling class, and they do, right? Obviously, if you want a modern day king or queen, go look at Kim Kardashian or her counterpart Kanye West there, right? That's the modern ruling class in a way. They don't actually rule us, funny enough. Those guys aren't powerful enough to rule us, but they're rich and they're powerful and they're famous and they're in your face and blah, 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 right? So that class obviously is not a monolith. There are wealthy, rich people who absolutely abhor the way the world is set up right now, and there are people who love it, right? Because they benefit. But what is interesting is that in order to stay on top, right? Like in order for Kim Kardashian's head not to end up on a pike, she needs people to not be mad at her. And some people are because they're jealous of her accomplishments and her success and her good looks and blah, 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 right? And then other people admire those things, and so they aren't, right? And so on balance, she needs more, or at least a good minority of people to admire her rather than to hate her so that she can be safe in our society, because she has so much resources that she's an easy target to be singled out by the mob if a significant proportion of the mob doesn't like her. This is true of people like Bill Gates, Elon Musk, Jeff Bezos, whomever, right? If I can kill Jeff Bezos or attack Jeff Bezos or whatever the word is, right? If I can take from Jeff Bezos his 200 and something $billion, there's so much upside for me in taking from that one individual that there might be millions of us targeting him, and there's only one of him. So there's only so much he can do, right? And one of the things that we see is money cannot buy everything, right? In fact, it's quite limited in what it can buy. And so the more money that you get, the less that it matters, right? Like at some point, you've got a Bugatti and a Lamborghini and a Ferrari. There's really nothing more you can buy. Maybe you got a private jet too, right? Like Elon Musk is one of the poorest men in the world in a sense, because he knows that his money has no value. There's nothing he can really buy with it anymore. But there are some things that money cannot buy, or at least that are very expensive to buy with money, that are very, very valuable if you're wealthy, right? And one of those things is public image, right? Why does Bill Gates donate so much money to all of these charities, ostensibly his own foundation? So a lot of times, how charitable is it? But why would you do that, right? And the answer is, well, because Bill Gates can buy anything he wants except for the respect and love of other people, right? And if he spends his money on charitable acts and these good PR things, then maybe, just maybe, he will get the love and respect of some people, which we see does actually work, right? So he's allocating his resources to meet a need that he has, that otherwise might go unmet, right? But I think a lot of the people in his cohort, rather than giving away large sums of their fortunes to basically run a good PR campaign like he and Warren Buffett are doing, they would prefer that the world just be misinformed. It's easy to keep people from taking action against you when they don't understand the situation they're in, when they're misinformed. When they're misinformed, they're disempowered, right? There was a time in your life where you didn't understand the difference very well between an asset and a liability. How do you go out and buy assets if you don't know how to differentiate them from liabilities, right? You can't. It's difficult, right? How do you call out your government on their BS if you don't understand what a recession is? You can't. It's difficult, right? How do you call out the government on messing around with your rights, for example, when you don't know what your rights are? The answer is you can't, and it's difficult. So do we have an entire, I guess, political class or situation or something? It's not, I don't think it's a conspiracy. I mean, I don't really know, but I don't think it's like a cabal of people. I just think it's an arrangement that's emerged over time. But you have this group of people who their interest is in keeping the general public as sort of poorly informed as possible, right? And we see this because kind of as like a cultural movement, right? Today, a man can be a woman and a woman can be a man, and a gay man loves a man, but that man can be a woman. I got no beef with anybody, LGBTQIA, whatever. I don't care for their acronyms. People are people. As individuals, you're individuals. I love or dislike you as an individual based on how you treat me and how I see you treat other people. That's it. Life is pretty simple for me in that regard. The idea of some of these things that are being pushed, though, in the name of these people, which that's the part that always makes me sad. Like, I hear people talk about what Black people want all the time. I'm a half Black person. I never hear my opinion or my perspective represented by these clowns talking about what Black people want. Maybe a lot of Black people do want those things. I don't know, but it certainly doesn't represent all of us, right? And so it really disgusts me whenever I hear them talk about the LGBTQIA, blah, blah, blah. Because you don't represent those people. You never do. I'm sure there's plenty of gay people who don't agree with the trans people. I'm sure there's plenty of trans people who don't agree with the queer people, et cetera, right? Individuals are individuals, right? But we go around with this stuff, and what are we doing? We're confusing people, right? Why are we confusing people? I don't know. I couldn't say. But you see it, obviously, in this very political issue with the whole LGBT, trans, blah, 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 whatever stuff. We see the exact same thing in the economy, right? I mean, the government literally gaslighting its citizens and saying, no, what you see is not actually happening, right? So that's something that we all need to remain aware of. We need to be cognizant of, because the prevailing trend or the force is pushing us towards being misinformed. And from a position of misinformation, we become paralyzed because we don't have the information we require to act and to get what we want, right? And so that's very important to understand. Just to give you a really simple analogy, if I give you my credit card and I say, hey, go to the store and buy, I don't know, groceries for the week, right? Here's my credit card. PIN number is 1234556. There you go. Nice and easy. So I give you my credit card give you the PIN number, send you to the bank, and you hear 1233346. Let's just say, which is not what I said, right? That's a different number. So now you're misinformed. So you go to the store, you pick up all the groceries, you get everything ready. Your bill comes as, I don't know, $500. You're ready to go. Pull out my credit card, 1233456. Declined. You're not buying any groceries, right? Because you don't have the correct information. You have not acted with precision, and therefore you cannot get the outcome that you would like. Well, it's the same thing, right? Obviously, that's a very direct and simple example. Obviously, the economy works the same way, right? If you're going to go out and buy assets, right, and you don't understand what cash flow is, how are you going to buy assets, right? So it's the same problem, and we see this throughout the economy in all sorts of places. There's a lot of people who don't understand, who misunderstand, and there's a small group of people who overcomplicate just to make it harder to understand things so that it makes it more difficult for you to take action, right? And I don't know if that's intentional or not, but that's just the effect that happens. So be mindful, maintain a positive mindset, and realize that the world is actually still full of opportunities, even if the economy in general is taking a turn for the worse. To close, prices are falling right now. We've seen in the GTA, I think sales are down about 47%. So we are seeing prices go down. We are seeing inventory increase, right? These are both positive signs for investors. Certainly, it's going to mean that coming up, we're going to be seeing more and more favorable pricing. Right. And really what's interesting is we've seen this across the board. So you've seen the same, maybe not the same, but we've seen a similar trend traced out in the stock market, the cryptocurrency markets, not so much the bond markets, but they function very differently anyways. And in gold markets, precious metals, right? We've seen very similar trends across all of these markets as the economy is kind of reacting to the recession or to the economic outlook not being as rosy as they thought it would be. So that's something that everybody should be wary of, right? Be paying attention to. Certainly, if you've got some loose change kicking around, it's not a bad time to buy stocks. Maybe Vanguard, VTI, or VIX. If you don't feel comfortable picking individual winners, probably either of those will perform very, very well over the coming years. Last but not least, I wanted to talk about the teachers union. Very last thing. Teachers union is currently in negotiations with the provincial government about their compensation. Because they're in position to strike. I don't know. I think it's this year, or maybe it's next year, like 2023. They want an 11.8%, so it's reportedly 11.8% pay increase. The teachers union has been doing the math on how much inflation is hurting their income. They want an 11.8% pay increase. Did you receive an 11.8% pay increase this year? You will probably see something similar to that in an increase in the value of your assets if you own them, which is why it's so great to own assets, because you get your pay increase without asking for it. If you're an employee, you, like the teachers, may need to ask for your 11.8%, which sucks because in most cases you're probably not going to get it. That's the truth. I mean, if you get a promotion or something, you could easily do much better than that. But if you're just asking for a straight pay raise, most employers are going to laugh at a 12% increase. But maybe you're the awesome exception. Either way, that is the reality of what inflation is doing, right? Is the teachers feel that they're at least 12% poorer than they were a few years ago. And make no mistake, they are going to strike because, well, two things. One, the teachers politically are lefties and they don't like the provincial Conservative Party that's in office in Ontario. But then, secondly, and more importantly, uh, no matter who is in office in Ontario, they probably can't afford to pay the teachers 12% more. The teachers being one of the largest line items in their budget already, or education being one of the largest line items in their budget already. They probably can't afford a 12% increase. And if you think it stops with the teachers, we haven't heard yet, but I'm sure the police union is rumbling. The nurses union is rumbling. I'm sure the doctors are rumbling. So all of these people who are all also paid by Ontario, right, are going to be coming with their hands out for that 12% increase as well, right? So it's going to set a precedent. Chances are there are going to be strikes. So if you have children, nieces, nephews who are in the Ontario school system, this might be a bit of a rough year for their education. We'll probably see teachers walk out at some point coming up. And so that's just something I wanted to touch on because it's, again, an indicator of where the economy is at and what has happened and what's been happening. And obviously, we need to be aware of these things so we can take action to safeguard our assets, our economic activities, and our financial futures. Obviously, when you are investing, there is the technical side of things to learn, and there's so much to learn there, and that's a continuing education, right? As you tackle new and different projects and become aware of the pitfalls and the concerns that you need to be aware of for each different type of project, that's something that you'll continuously be learning. But the other thing that you have to constantly be on guard for is your mindset, your mentality, right? So don't allow yourself to become discouraged or complacent, right? I mean, everybody's goals are different, right? If you're not aiming to be mega wealthy, then how diligent you need to be is going to vary. But if your goal is to have a comfortable, financially stable life, it's really not that hard as long as you can keep your head up and keep taking action consistently to acquire assets, right? One house every 5 years for the next 30 years will mean you'll own 6 houses by the time you're ready to retire. And if you own 6 houses by the time that you're ready to retire, those will probably cash flow heavy enough, especially if you have them paid off by then, which at least 2 or 3 of them you will be able to pay off in that time, maybe even 4, depending on how you handle the cash flow from the ones as you pay them off. Would mean that you would have quite a significant income by the time your retirement age, right? You could do that same thing in 5 years and buy a house a year, but that's obviously much more work, much harder. There's a lot more hustle involved. You got to go find people with money because you're not going to have that money in that period of time. But that strategy will pay off for you as well, right? So the biggest challenge, especially in times like these, because we're in a recession, because the economy is down, because the attitudes and opinions of the people around you are going to turn sour, the most difficult thing in times like these is to focus on the positive, the possibility, the potential, and of course, taking action. Right. I've taken a bit of a haircut on net worth. Obviously, I think some of my properties are worth less. I mean, I'm not getting them appraised right now or anything, but some of my properties are definitely worth less than they probably were 6 months to a year ago. And I mean, that sucks. And maybe if I was the Houdini of investing, I'd have maybe sold or reallocated my investment, 6 months ago and be on to the next one. But I'm still up from when I bought them, and like quite substantially in most cases. And I mean, that's the thing that matters, right? Is we need to understand that, yes, perfection, right, will get you ahead. Of course, if I sold there, I'd have more money now to buy more, blah, blah. But you don't need to be perfect to do very well, to make lots of money, to be comfortable, to get ahead. Not just for yourself. I mean, you make your family come, whatever your goal, whatever your objective is, right? So keep that in mind. Positive mental attitude and accurate thinking, and trying to just keep your eye on the prize, your eye on the target, because we live in a world that is constantly trying to distract you from that, and that really is very focused on selling you on negativity and disempowering you through misinformation. So that's it. That's all I wanted to talk about this week. I definitely think. Well, I wanted to put the recession talk into some perspective, and spend a little bit of time reminding you that for all the doom and gloom talk, there's still a lot of potential out there, and it is very, very possible to get ahead. But we've got to be focused on taking action. If you to quote Woody Allen, right? 80% of life is just showing up, right? If you can make the commitment to yourself today that I'm going to buy a property, I don't know, let's say 3 months. As soon as you can make that decision, really the rest will do itself. There's lots of work to do in between here and there, but call a realtor, tell them that that's what you've decided to do. They'll bring you properties. All you gotta do is say yes or no, do the analysis on them, right? Go to a banker or a broker and say, hey, I've made this decision. They will get you the mortgage if they can, right? So there are people who will help you every step of the way once you've decided. It's the biggest thing absolutely is deciding, right? For those of us who've decided and taken action before, you know this to be true, that the thing that slows you down the most is your ability to make choices or decisions. And the better you get at making those decisions, the faster things flow. So just focus on that, because there's so much potential and there's so much opportunity out there. And I'm excited to see what happens in the next 2 or 3 years. Because, the last time we went through this was 07, 08. I was just graduating from high school or had just graduated, whatever it was. I think I was in university. I wasn't really in a position to take advantage. I was too young and inexperienced and lacking the knowledge to really know what an opportunity there was in front of me. And, no, we're going to try not to make that mistake this time. These things only come around once every 10 years or so. So thank you for spending your time with me. We're going to cut it short a little bit early this week. Please enjoy your day. It looks like we've got another beautiful one lined up, and I hope that you have a great week and you focus on investing. You think about strategies, you go out there, you analyze some stuff, and you understand the market, and you see the opportunity. And if you've made the decision to take action and you need a little bit of help, I'm happy to take your call or your email or whatever, and see who we need to connect you with to make something happen. And you just take our time, sit back and watch the market, and you will see the opportunities. They'll emerge for you on their own. Okay. So anyways, again, have a fantastic day, and thank you so much. I will talk to you next week.